G'day, mate. How are ya? How's your mum? Shall I throw a pip on the barbie for you? Ripper. Time to get going, everybody. Welcome to Forex.Today, the YouTube community of 22,000 foreign exchange traders? Bum, 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 bum. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let's go! Bada bing, bada boom. Good morning, everybody. My name is Wayne. Welcome to my home office. Let's do some trade setups. We're going to do technical fundamental analysis with our overriding goal of planning our trades in advance. We're going to use the TRADARS analytical platform. We're going to use Trader's Way as our execution partner. Perfect little combo. We'll go through the news headlines that came out just recently. The stock market's about to open, so we'll take a look at current risk sentiment. Please complete the poll. The benefit to you for completing the poll is you get a sense of what everybody else is thinking. So, it's the law of reciprocity. Put something in and you'll get more out. You got to play fair. It's totally anonymous. You have nothing to lose but tons to gain to figure out what other people are thinking and doing. So this is just one way of sampling market conditions. We have many other ways as well, so we'll go through that. You want to look at charts? We got charts. You like to scalp? We got scalp. You want the spot swing position? We can do all that and so much more. So without further ado, let's get in on it. Let's start with the update of headlines.
Eurozone. Financial impulse points to solid growth. Commerzbank. XRP gains momentum as crypto market rebounds. ETF inflows hold steady.
US dollar Canadian dollar technicals. US dollar Canadian dollar rebounds after failed downside extension in Asia. South Africa PPI inflation eases to 5-month low.
NVDA stock treads water after earnings. Why buyers are cautious despite a huge beat.
U.S. dollar Swiss franc rebounds after consecutive losses amid U.S. labor data. Safe haven flows.
Fed, steady policy with later cuts. TD Securities.
Pound yen falls as yen firms on hawkish BOJ remarks. All right, let's take a look at how cool things are. So here's a headline coming off of FX Street. Came out about a half hour ago. Fed, right? Federal Reserve Bank of the United States. Steady policy with later cut. I don't know how the author got this opinion, but I can show you as an example. You go to fundamentals and you go to our bond radar. We're looking at the capital flow over the last month into and out of certain treasuries that form the yield curve. And then we can look at the change of yield curve. So we see the flow and then the change of flow. And so we're looking at the shape and the change in the shape of the yield curve. And based on that, okay, analyzing the entire treasury market, which is way bigger than the stock market, based on how money is being invested right here, right now, these large institutional investors have looked at all known information. And they said, based on all known information, the Fed's on hold. So I'd agree with that FX Street headline, but it's because I have the data, not because I have an opinion. This is the opinion of thousands of traders with hundreds of billions of dollars. Money currently is flowing mostly into the 5 and the 10 and has actually come out of the 3 month. So this dropping, this rising, that means something. Isn't that cool? I know, right?
Financial impulse points.
I'm observing a risk-on sentiment in the market today. So how'd you guys do? Huh? You're not just pretty, but you're pretty smart too. That's exactly correct. We're risk-on. Bolstered by a slight uptick in the U.S. 10-year yield. Neat. Vol coming down, that's risk on. Stock market going up, that's risk on. Bitcoin recovering, huh? Hanging in there at 68. Well, that's good. That's risk on. Nice move of gold. We were at 52, but we're still hanging in up there. Nice move in this case. Gold up, oil up, dollar down, euro yen up. What does that all add up to? Risk on. Now, of course, we considered a heck of a lot more than that, but that all makes sense to me. VIX down 15% week over week. Oil up 5.5%. Gold up 2.41% week over week. Bitcoin down though, but it's had some fall, hasn't it? It's been up, it's been down, it's been up, and it's been down. We haven't been above 70 for a while, so that's kind of the next threshold. 210 spread widening slightly. S&P 500 down 1.15 week over week. 10-year yield is falling. Money went into the 10-year and pulled the yield down. Money into the yield or into the treasury and pulled the yield down. Nikkei basically flat week over week. Investment grade bonds up 1% or 0.95% week over week. Dow kind of flat. 2-year yield up less than 1%. Junk bonds flat. German stock market up 0.6%. NASDAQ up 1.21 week over week. Had a good day yesterday. Yeah. Dollar week over week is stronger, but has fallen. Yeah. Anyway, so kind of neato, huh? Neato. We were quite ugly there for a while. Recovered, hesitated, recovered, and we're in that recovery mode. This is important because of seasonality. Remember, we have been talking for a few weeks, a couple of weeks, of even if you're in a down market, there's a period in time which the market recovers in the direction of the prevailing trend. What you're trying to figure out is, okay, February started cold and now is heating up again. Is that normal? Is it abnormal? Well, we have all that data. So you want to look at what works in a risk-on environment. And you can say VIX could be a big thing. What tends to work well when VIX is down? We're risk on, so VIX down, right? So one of the things I've added here, when you click the asset that you're analyzing, Aiden actually tells you what it means. Okay. Isn't that nice? Dixie versus VIX. Dixie and VIX have a weak positive correlation of 0.42. When Dixie rises, VIX tends to rise as well. When VIX falls, dollar falls. Isn't that cool? It's not a perfect correlation. It was pretty good. I hope that's a helpful improvement. Then you're like, well, Wayne, I want to trade a stock indice here. Okay. So VIX down, Dow up. VIX down, NASDAQ up. VIX down, S&P 500 flat. Sometimes up, sometimes down. Good to know. Your best odds with in a risk-on environment in which volatility is falling, NASDAQ performs the best. And not some esoteric 20-year average. This is all calculated over 90 days. So it's very sensitive to reality. Isn't that cool? So you're like, oh, should I trade NASDAQ today? Yeah, maybe. Let's look at it. Looks like it might be warming up. What do you think? You guys, are you able to read that chart? Long-term trend. Long-term trend has been down. We know this. Long-term meaning the last few days. It hasn't been bullish. Okay. Medium term, still not amazing. But it's starting to warm up. And that's what you want to look for, huh? Yeah, for sure. So now the next thing is, how about a higher high, higher low at the open? Well, that's when you go into your charts, right? Not bullish yet. Okay, it's not bullish yet. And if you look at, there's a couple of things. Oops. There's a couple of things going on there. The moving averages are not bullish. No. No. But we hit the weekly bearish target. So we're probably going to lose some bears. We double bottomed on the monthly target for bears. So once again, bears have bailed. Now what we need as a bull is for bulls to buy it, but you wouldn't buy this. That would be dumb. And then also statistically, it's still the projection cone, the base case is still lower than the current price. So now maybe our job over the next few hours, or maybe at the open or whatever, is to confirm a change in direction. So maybe use a 5-minute chart to do this. Okay, but realize on a 15-minute chart, based on what has happened in the past, you're too early. But you can narrow that down on a smaller time frame and tiptoe into the open if that's your aggression level. So now you could maybe play it out this way. It is a fiver. And no, that definitely looks bearish. But that's what Aiden was telling you on TRADARS. You might want it to go up, but the charts do not confirm it. The trend does not confirm it. The statistics do not confirm it. That there's definitely bearish in there. So even if you're a bull, you want to wait for confirmation, because your bullish bias would be a thesis based on current market conditions. In this case, they've been risk on. Well, they may be risk off now, so we have to wait for the update. So if you start, and don't get frustrated with this is just because you're reading reality here. Up until now, we had risk on. There's no doubt about it. I measured 100 different variables, and the way that all the constituencies, treasuries and bonds and crypto and currencies and foreign indices, and looking at all these measures, is or has been risk on. So then you look at the chart and you're like, well, that's not risk on. Good. It's still a thesis of risk on will continue today on a Thursday. Do we know if that's going to happen? No, we don't. But going into it, you know what is. It's not a guess. It's not how you feel. It's the sum of, the sum of all parts, the sum of all traders. Then you go to the chart, and it's not bullish. So you can wait. Now, what if you were playing a different game? You're like, well, the market might be bullish, but I'm a bear. Well, then that's why it opened this way. Now, I can't confirm if all the, I can't say that all the other market participants are bearish, but maybe you're okay with that. Maybe you believe because of the earnings released by NVIDIA that this is a down day or a down week. Maybe you're using other things. Perfectly fine. I'll show you how, this is a 5-minute chart. So before I go there, what I should tell you is if you're still a bull, these are the buying prices. You should know that. So now as the stock market opens, that could be a buy for you because you're a bull based on risk on sentiment and other market indicators. Well, that's a buy price and that's a buy price. Okay. Do traders use pivot points? Well, look at it drop precisely there and then respond. But also, like, let me just change the template, but not the chart. If I go into like a swing bear mode, look at that, dude. Okay, clearly that's a selling price. So clearly there are bears in the market, and they do know the price. If we go to where's day trading bearish bias here, okay, there's our sell zone. Cool. Which one's right? I don't know. What do you want to do? The charts are not going to answer the question, what should I do today? You should buy it because MACD told you so. Well, that's dumb. And I love Mac. But let's kind of put some, stamps here. If you are a bear, okay, that is a great selling price. If you are a bear, okay, this is our central. Is it a good selling price? No. The top one is, but the bottom one isn't. And then we change the indicator and say, no. Wayne, I disagree. I'm a bull. Well, all you do is change it from bearish mode to bullish mode. And we know a bull on this, right, on this time frame is interested here. Okay. You can change it out and say, not that time frame. You like the idea, but not that time frame. You can go daily to weekly. Let's wait. Yeah. Another thing you should look at is price action. Cool. So if you were a bull at the open, you may get your opportunity, but it's not now. This is what it's saying. Okay. Remember this price up here? What's this dotted line? Let me show you again. Let me show you. Weekly. That is the projected high for NASDAQ that we had on the close on Friday. So on Saturday, Sunday, Monday, Tuesday, and Wednesday, we knew this number would be important if the market was going to be bullish. Now, we don't know if the market's going to be bullish. However, if it is bullish, that is a profit target. It's the conservative profit target. In fact, if I can fit it on the chart, profit target conservative. It's labeled. Cool. So this downward move, you'll probably hear on TV, wherever you get your news, you probably hear this is something about NVIDIA, blah, blah, blah. Oh, it's Donald Trump. Oh, you mean President Trump? Oh, it's the Russians, it's the Chinese, it's the Iranians. Or maybe it's just where people are supposed to take profit, not sell. There's a difference. If bulls are selling, then bulls will buy it back. If bears are selling, bears will sell lower highs because they'll sell the rip. So if you are, don't be influenced by the candles. If you're a bull, you have plan A and plan B. Plan A and plan B. And you kind of want to toggle back and forth based on the time frame you want to trade. So if you are like a day trader, I would use monthly and weekly pivot points to say, what should I do today and how far will it run? Well, this is saying if you're a bull in the stock market, despite it falling right now, the market is bullish. Then why is it falling? We hit the target. Yeah. So what's the plan for next week? Now you're brilliant. If you're like, oh, good, we're done for the week. This move is bulls selling, not bears selling. Bulls are selling because they're taking profit on their bullish trade from last week. They bought in the green zone, and that's the target. And now, what's the plan for next week? When you think like that, you're on a different level. This week's done. Mission accomplished. What's the next mission? Next mission is we're going to head up to not quite 26,000. Okay. And the general sort of standard operating procedure on this one looks like that. That's the general strategy if you're a bull. Will that happen? We don't know. But you know, between now and Friday, if we get a role reversal, we're going to want to, buy the green, higher high, higher low, buy, higher high, higher low, buy, higher high, higher low, buy, higher high, and now start thinking about taking profit. So what if that's the weekly plan and I was talking about higher highs and higher lows, what are those? Daily pivots. So this goes back to you want to have daily pivots and monthly pivots combined, right? I'm like, wait, like this? Yeah. Just like this. These are based on 15-minute moves, weekly and monthly pivot points. Okay. Confluence. Whoa, dude. Okay. Whoa, dude. So we already have all of that. And all this says now is, yeah, son, it's not a bad idea. You're just a bit early. So let it fall and then let it use confirmation of buying when it goes from red to green. Okay. Right? Like our trend radar. Okay. Look at that. Our short term linear projection actually points out almost precisely the same price, 26,000. Cool. Long term, it's down. Medium term, it's down. Gotcha. Okay. So, anyways, you're early, but it might turn around later today. Okay. So, what's the general plan? Okay. That's the general plan. Wayne, that looks like a Fibonacci retracement. Uh-huh. You mean like this one? Yeah. 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 Just like that one. And then just like that one, maybe, huh? Let's see, we can automate all this if you want. Oh, I know. Insert indicators, custom, and you go down to the zigzag. Zigzag. Let's make it a fatty so it's easier to see. Cool. Okay, so lower high, lower low, already drawn for you. So now you could wait for it to stop making lower lows and lower highs and wait for it to start making higher highs and higher lows. And your target is probably going to put you in somewhere around 25,000. Sorry, your entry around 25,000 and your target 26,000. So your fundamentals are telling you up, your charts are not telling you down, they're just saying not up now. Charts only tell you the price and the time. So technical analysis is nothing but the price and time. It doesn't tell you to buy. Well, so if you use the fundamentals and seasonality and you happen to be a bull, this little pullback that we are now approaching, we're close enough now that it's good enough for the girls I go with. So anywhere around here is fine. And we're using price action. We're using next week's central pivot point. But you can't do this if you don't already know if you want to be a bull or a bear next week. Forget about now, the market open. Like, dude, where were you yesterday to figure out now? So the idea is you should be thinking about next week. And therefore, the market opens here on Thursday. It's straight down like a ton of bricks. Cool. What a great buying opportunity if you're a bull. Neat, right? Plan B is right there. Cool. So in that case, it's one of those situations where the market opens, it drops, and you know the price in which you're interested in possibly maybe buying, and we're pretty close to that now, so good enough. And so now all you need to do is drop into your 5-minute chart and wait for some magical technical analysis to tell you it's bullish. Well, what do I do, Wayne? Well, you can use a moving average, you can use RSI, you can use stochastics, you can use MACD, you can use a pattern. Is it a double bottom, higher high, higher low, 1, 2, 3 hammock? Is it a Gartley bat? Is it a Gartley butterfly? Is it? I mean, dude, just pick one, anyone. But it's weird, right? This is nothing but red candles. Got you. I want to buy it. Okay. Yeah. But you have to have done your fundamentals and all that kind of stuff, market conditions and all that kind of stuff. Yeah. So I've been upgrading a lot of stuff, sometimes in small ways, sometimes in big ways. Um, but the seasonality table has been updated radically. And even our contrarian radar has been updated in our scoring and is quite nice, if I may say, raw. Yeah, gorgeous. So NASDAQ is falling, and it's unexpected. That's a contrarian. This is the contrarian radar that's contrary to our fundamental beliefs. We have it scored at 1.74 out of 10. Now that's not a lot of conviction, but well, that it is what it is. It's not an opinion. But we're modestly bullish, and it's modestly bearish today. Oh, well, that's unexpected. That's contrarian. We may want to buy a dip. You see how beautiful this is? Now I see this. I'm like, what the hell is that? I'm like, wait, what? So now I got to figure out what the heck is going on here. It's got a double on the price feed, or are they all double? Dow. Oh, they're just different names. Yeah, he struggles with that. He meaning Aiden. Yeah, US 500 versus S&P 500. NASDAQ 100 with small letters. NASDAQ 100 large letters. All right. Yeah. Okay. I have a feeling. Right. I have a feeling I know what's going on. It's a naming issue. So, all right. All right. DAX is fine. That's so funny. Got to figure that out. Hey, that's part of the glitches. It's hard to do this. This is hard work. All right. All right. All right. The thing, like, we expect this to be bearish. We expect this to be bearish. We expect this to be bearish. Those bearish as expected. So we have congruency. Kiwi dollar up, unexpected. USD Swiss franc up, unexpected. Okay. USD CAD up as expected, not by much. And USD yen down, unexpected. All right. Cool. No crypto, no. I can get just to briefly show you the amazing update on seasonality. Let's see. Cool, right? So we have the best movers up or down in February, but we should already be thinking March. How do I think March? Well, you can look at the table here. I'll get rid of that window. You look at the table. So this is S&P 500. February is down, March is up. So somewhere in February, we want to buy and ride it through March. Make sense? You're like, well, then you go here. Aha! February typically declines for S&P 500. Historically, S&P 500 recovers in March. So somewhere in February and leading into March, you want to buy and hold. So if you, right? So like for example, in February, the S&P 500 has gone up once in the last 6 years. But you can see that it typically can drop as much as, let's say, 3.5%. So wouldn't it be cool if somewhere between 1 and 3.5% you were able to buy the S&P 500, hopefully in the second half of February, and then hold it to at least the second half of March. So in a perfect storm, you'd get down 3 and up 2 for a differential of 5. Cool. 80% of the time, March ends the month higher than it started. Okay. Isn't that wild? So the down move typically happens in the late part of the month. Trend, this downward pressure, trend completion, consolidation, and early positioning ahead of the March recovery. I don't know. What do you guys think? Is that helpful information? And we have that for everything. Cool, right? You should already be analyzing everything for next month and next week. If you're focused on like this idea that okay, Nasdaq opened red, so you're gonna sell, and that's it. That's your, what do they call that? A London breakout strategy. You're a gullible. Yeah, you're gullible. The way the professionals trade is it's down hard, and they're like, cool, because I'm a bull and I want to buy low. There's my opportunity. So a professional looks at red candles and says, that's an opportunity. An amateur looks at red candles and says, oh my God, look, everybody, red candles. I guess I should sell too. Dude, bless your. So to plan next week, you would just go to the swing trading tab, plan it. Right? So there's the swing trade for Aussie dollar. Oh, you didn't do your swing trading yet? Oh, really? even though I've automated it for you. Dude. Well, let me just say it more clearly. You need to be planning all of next week now, today. If you're going to improve your trading, today is already done. You should have planned this out yesterday. So if you saw a big positive move recently on an asset like NASDAQ, then you should expect it to fall, and then you should expect it to buy if it makes a higher low. The fact that it's falling is an opportunity. Not to sell, but to buy later when it stops falling. Because it's not selling, it's profit taking. So you're more interested in buying that dip that's occurring. That's better. So really, you should be planning next week. So what's the plan next week? We're bullish. And our base case scenario is pretty much the monthly M4. But we can head up as much as monthly R2. Yeah. And then we need to be using the new pivots, which this will draw, of course. Yeah. You should be on next week. So here's the bottom line. Much of TRADARS is free, but we use a freemium model. So there are some premium upgrades you can pay some money for. If you link your Traders Way account to us, you can earn a rebate. And your spread instantly gets narrowed. Instantly. Narrower. You get smaller spread. Yeah. And if, depending on your trading volume, if you trade, 2 or 3 mini lots a day, you'll get some or most or all of your monthly subscription fee rebated back to you via PayPal in cash. Huh. How nice is that? So, as amazing as TRADARS is, it's either cheap or free. Pretty good deal.
Takaichi may have made the Japanese yen problem even bigger.
U.S. midterms, Fed leadership, and U.S. dollar risk. TD Securities. Exclusive U.S. extends deadline for potential buyers of Lukoil assets to April 1st.
Bank of England, stronger data versus easing path. Standard Chartered. Exclusive Trump EPA to shift at least half of waived biofuel obligations to big refiners, sources say.
China's central bank issues. New rules to boost yuan cross-border financing. Cyprus industrial output growth eases to 3.5%.
Fed's Moran. The Fed should cut a percentage point this year.
Miran is a knucklehead. Thank God he's not running the Fed. The dollar would be worth zero by now, and gold would be 30,000. But anyways, gotta replace him. So, anywho, it's fabulous to have you here. If you're new, please subscribe just so we'd like to see you around. For everybody else, I've known you a very long time. Thank you with your patience and discipline with me. patience with me and your loyalty. I appreciate. I'm loyal to you back. I hope you do. I hope you do know that. And tomorrow I'll be over at FX Street for their morning. Yeah. And I will just keep plugging away, doing our thing, doing what we do best. But again, for you all you all, most of TRADARS is free. It'd be really great to have you involved. I think you should be using these tools. The Squawk Box alone is worth $100 or so a month. It's totally for free. The Trend Radar is amazing. You have access to that. There's some pretty cool stuff. The scatter plot is amazing. That's included. So take advantage of the fact that most of this is free. You should be using this data. Peace on earth. May the pips be with you. May your profits be above average.